Thanks for joining the webinar on the luxury watch conspiracy. I'm excited for some of the content that I've got to share here. I think it's going to be really, really interesting to this member community. And I first want to also thank Lindsay and Liv and the Utopia team for making this webinar happen. So my name is Erich Wolters. I'm a strategic luxury curator and advisor. And what I plan to do today is to share, I think, some really unexpected truths inside this like subsector of the luxury watch space. And I'm actually making this information public for the first time and exclusively for Utopia members. And the presentation is going to be recorded and shared with all attendees. So you've got that afterwards. I'll be asking some questions like as we go throughout. Definitely, if you've got your own questions, you can throw it into the chat box, and I'll do my best to answer those. And I do need to provide a quick disclaimer before I jump into the actual presentation. So let me just go there first. So the info that I'm going to be sharing in this presentation is for educational and informational purposes only. It doesn't constitute financial investment or tax advice, and definitely consult with a qualified financial advisor, tax professional, legal counsel before making any investment decisions. And myself and the organizers are not liable for any actions taken on the content in the presentation. So let's get started without further ado. So look, I think we all realize that we live in a world of increasing financial oversight and market volatility. And this group knows really as well as anybody that we're all just like way overexposed on taxes. So for example, like you've got profits sitting in one country that you can only export if you agree to pay some absorbent tax, or you've got profits that are sitting in Bitcoin that are largely going to be wiped away from capital gains when you convert those to cash. But what I find is that most people don't necessarily really understand how luxury assets can actually offer really effective vehicles for wealth protection and wealth preservation. And so my goal here in what I generally do is empower individuals to preserve and move their wealth with elegance, security, and discretion with alternative assets like luxury watches. And the focus for today is going to be on luxury watches, but frankly, like the principles of what I'm going to be sharing today can be applied to almost any alternative asset. So classic and collector automobiles, handbags, but we're going to focus today on watches. So what do I mean by that? So we've got three celebrities, and just like all of us, they're overexposed on taxes. But they know something that most people don't. They know how to like discreetly and with like sophisticated processes to reduce their tax exposure and generally beat the markets. So what exactly do they know? Well, what they know is that how to use luxuries to keep more of their money in their pockets. And we see our favorite musicians, athletes, and celebrities wearing some of the hottest watches all over social media. There's channels that are dedicated to the latest wrist shots of our celebrities wearing watches like this, right? But what most people don't realize is that while these celebrities are enjoying the status of wearing like some of the most collectible watches and desirable watches and expensive watches in the world, there's actually a much larger strategy at play. And this strategy is where like luxury watches are a vehicle for portable wealth, tax efficiency, and asset security. And that's why I call it the luxury watch conspiracy. So before I move forward, I'm just curious, just like from those that are checking out the presentation here, does anybody own like a luxury watch today? Any luxury watch owners? You can like kind of drop it into the chat, or you can like raise your hand. Any luxury watch owners out there? If you're shy, that's okay as well. I assume there probably is or will be or maybe. But hopefully after this presentation, if you're not, you'll think about opportunities where you could be. So let's take a look at this first one, right? So you're scrolling Instagram, whatever, and like you see this photo of Messi, and like what do we see, right? We see Messi and he's smiling, he's happy, and like why not, right? He's got a Patek Philippe Aquanaut on his wrist, and it's $120,000 watch, right? But like, what does Messi see? So Messi actually sees portable wealth. So what does that mean? So what he understands, and what a lot of people at his level understand, is that this watch is actually like a vehicle to discreetly move $120,000 of wealth across borders. Here we got Travis Scott, right? So what does the average person see? We're scrolling through social media. We're like, wow, look at that AP. That's insane. It's an AP Royal Oak, double balanced wheel, open works. You've got all the gems in the bezel, frosted. It's really, really an incredible watch, right? And it's worth $250,000. But what does Travis Scott see? So what he sees, and again, like what people at his level see with these watches is tax efficiency. So what does that mean exactly? Well, what he does and what so many others do is that they move their profits from Bitcoin into one of these watches, which essentially wipes out those gains when you go to liquidate the watch, right? So it's a very sophisticated and discreet way to think about Bitcoin. All right. Finally, what does the average person see here? Right? Jay-Z, Beyonce, super dapper, very elegant. He's got an absolutely crazy watch, Patek Philippe Sky Moon Tourbillon. This thing is valued at like an eye-popping $5 million on the open market. But what does Jay-Z know that the average person doesn't about this particular watch? Asset security. So he knows that like specialized Patek Philippe watches, as well as watches from Rolex, RM, and AP, they have historically outperformed the S&P by more than 3x. So again, like welcome to the luxury watch conspiracy. Hopefully this is like starting to create some curiosity and some interest. And I'm going to go a lot further into like each of these strategies that I've started to introduce here. And again, like on Instagram, like we see so many of these celebrities with really expensive watches. And a lot of people may even be like, hey, I'd prefer my Apple Watch to one of these, right? Like we can hear so many of these people now saying like, why do we need something like that just to tell time? Or, hey, these guys are all so rich, of course they can just waste money on luxuries. Yet what so many people don't realize, and I'm going to let you in on the secret here as we go through this webinar, is that the wealthy actually utilize these watches as vehicles for global liquidity, financial sovereignty, and wealth preservation. And obviously these watches are great status symbols, but they're also discrete financial instruments. So before I go any further, let me just ask, like, hopefully this is landing. Is this like resonating to those that have kind of jumped in? I think there may have been a couple that jumped in a little bit late, but we're really kind of just getting started with the interesting content. So any questions, you can feel free to throw something in the chat or raise your hand. And if not, I can just keep going. All right. I'm going to take that as a just keep going, Eric. Cool. All right. So my purpose, and I spend a little bit of time on this in like my introductory slide, is that like my purpose is to empower you to preserve and move your wealth with elegance, security, and discretion with alternative assets like luxury watches. And I'm going to tell you exactly how I do that and others do that. So we saw this slide earlier. And really, we have to rethink wealth preservation and how luxuries enable that. So many people see the photos of Messi and Travis Scott and Jay-Z, and they just admire their lifestyle. And frankly, I think a lot of us just like try to chase that same lifestyle. But as we chase that lifestyle, we also have to make sure like we're understanding at the same time the strategies that Messi and Travis Scott and Jay-Z are using to not just wear wealth, but to carry it. And so let's take a look at a few examples to prove my point, starting with how luxury watches are used for asset security. So this is a chart from the Boston Consulting Group. So some of you may be familiar or may not be familiar with Boston Consulting Group. So they're one of the world's largest, most prestigious management consulting firms. They work with most of the Fortune 500. Very, very reputable organization is like the point that I'm trying to make here. So a couple of years ago, the Boston Consulting Group, or BCG, they produced a report that analyzed the explosive growth of the luxury watch market, which was valued at the time that the report was published in 2023 at $75 billion annually. And Exhibit 1 from the report is what I've pulled here. And it shows that models from Rolex, Patek Philippe, and Audemars Piguet have appreciated about 20% annually from 2018 to the publishing of the report in 2023. And over that same period, the S&P grew about 8%, 8% compounded annual growth rate. And so luxury watches, according to what BCG has analyzed here, again, very reputable company, outperformed the S&P by 3x. And it's this asset security that Jay-Z plays so well with his Patek that I showed earlier. And the report goes into a lot more detail on, there's a lot more transparency, there's a lot more authentication, scarcity within the luxury watch market that's transforming it. And BCG's conclusion here is like transforming it into a mainstream alternative investment, even through economic volatility. And in the full report for BCG can be found online. Like you can just do like a Google search for like BCG luxury watches, and you can easily find it, or you can just take this links directly from the slide here. And again, like this presentation and the slides will be shared afterwards. So let's take a further look, right? So more recently, I've kind of taken the foundations of this BCG report and I've built upon it on my website. And back in March, the markets were obviously like shaken by the Trump tariffs. And we saw about a 7% increase at the same time that was happening, that we saw all that volatility. We saw a 7% increase in the luxury watch market, like almost overnight. And this is not random, right? What we saw and what we continue to see is that capital was moving from the volatility of the markets into certain luxury watches. And people were pulling from crypto, they were pulling from stocks and putting it into the tangible value in the form of a luxury watch, like the right Rolex, the right AP, the right Patek, or the right Richard Mille. And this has driven a sustained increase, frankly, in the first half of this year in these watches. And there's also a very clear trend that has emerged as well. And that's that like watches that are made of precious metals, especially gold, they are actually behaving like gold itself. Like if you're not familiar, like gold has been on a tear in the first half of this year, right? Because it's a safe haven for assets. And so have the watches that are made of these precious metals. And I've been watching this very, very clearly, or very closely in the first half of this year. And like what's clear is that like when gold moves up, the value of the right watches moves right along with it. And what I've known for quite some time is now becoming just obvious is that luxury watches are not just collector items, they're investment grade assets. And so before I kind of go into the next section, let me just pause there. Hopefully this is kind of landing with the crew. And if there's any questions, I'd be happy to answer them on like the relationship between luxury watches and gold markets and asset and as like a safe haven, as well as frankly an investment that BCG outlined. And like, again, this is how like Jay-Z in the example that I share with his Patek, like he's outperforming the market 3x just by holding onto that watch because it's scarce, it's a precious metal, it's a phenomenal brand in Patek Philippe, and he knows just holding on to this thing, it's like better than just leaving money in the markets. All right, just gonna keep going. Let's see. So tax efficiency. I think this will be really, really interesting to this group. So let's take a look back at like the Travis Scott example that I talked about. And again, like it's a fictional example, but the principle is correct and it is used. So let's just say like 15 months ago, Travis bought 10 Bitcoin and it was valued at about $50,000 per Bitcoin. So as probably some of us know, that was a great time to buy Bitcoin, right? Because it paid off tremendously. It's like doubled his money, right? Bitcoin's over 100. And so his wallet balance is about $1 million right now. So he's up $500,000 in 15 months. Pretty good trade. But the taxes, he knows the taxes are going to crush him, right? So between the capital gains and the federal rates, like a big slice of those earnings is already spoken for. So what does he do? This is where Travis makes a smart move, right? So then rather than cashing out and handing over a chunk of that in taxes, what he does is he shifts $500,000 of those Bitcoin profits into a Richard Mille and 2 Rolex watches, paying directly in Bitcoin. So just like that, his digital profits were now sitting on his wrist, fully transferred into a tangible asset. And this tangible asset, unlike cars or unlike real estate, like the Richard Mille watch and the 2 Rolex watches, they don't require a title. They don't require registration. There's no paper trail. So he wore them around for a few months, enjoyed the flex, and then was like, all right, I'm ready to sell these. So he sells the watches on the secondary market and they appreciate it. So he made like a 5% gain on those watches when he sold them in the secondary market. So his newly calculated capital gains is 5%, not the original 100% with the Bitcoin. So the value of like transferring into these assets like luxury watches, it's like very quietly, very efficiently. This is like what real tax efficiency looks like. And I think that's pretty interesting for sure. Any questions on that or thoughts? Hopefully that's pretty interesting to the group. Okay.
Eric, I have an eye on, so if anyone messages, I'll stop I'll have you stop. Yeah, thank you.
All right, cool. Yeah. Okay. So so let's talk about portable wealth. And so here we're gonna revisit the Messi story, right? So like Messi was wearing his Patek, and it's like $120,000 watch, and we see Messi on Instagram, and we're like, wow, what an amazing watch! Like he's got a Patek, it's so beautiful, and he's like, yeah, it's cool, but like it's more than a watch, and for him, it's portable wealth, right? So like let's just say, for example, that Messi, like he's endorsed by Adidas. And Adidas is like, hey, man, I need you to go do an appearance in Hong Kong. And we're going to pay you X amount of dollars to go show up in Hong Kong and like promote our latest Adidas like line of whatever. And like you're there to promote it. So, you know, he earns a payday from this visit. But what we all know is that like, all right, he's going to get hit twice from a tax perspective, right? He's going to get hit by Hong Kong's local taxes, right? Because he's getting paid for like that work there. And then again, when he brings it into like Argentina or wherever the heck he might declare it. And while the payday looks great on paper, it's, you know, it's a pretty significant tax bite. And he's like, man, I've got this endorsement and I got to do this work for Adidas, but it's like, God, I got to jump on this plane and like the jet lag. And it's like, I'm getting crushed because I'm getting double taxed, but it's like, he's got to do it. Right. He does, but he understands like a smart way to approach this. And this is where I'll share kind of like the third revelation. So instead of like wiring the money home and watching it get chopped up in tax filings, he makes a smarter move, right? So he takes the payment directly in Hong Kong. And the next morning, his personal concierge walks down into the Hong Kong jewelry district. He's like, hey, I got X amount of money and I need to buy some watches. So he buys a Richard Mille, buys a Patek Philippe. These are both ready for their wrists, right? And pay for entirely with the earnings in Hong Kong. So again, like no forms, no registration, no paper trail. It's just pure asset conversion here. And by the time they board the flight home, Messi's wearing his luxury watch, his concierge is wearing another watch, and they're carrying their wealth. It's quiet, efficient, and smart. It's a portable wealth. And so similar to like the Travis Scott like Bitcoin story, Messi cashes out a month or two later with like a very minimal tax burden. And he knows his luxury watch is like a product that's wearable, but it also functions as portable wealth and like a tax advantaged store of value. So it kind of brings me to like my like kind of concluding like headline slide here, right? There's a hidden power of luxury watches that a lot of people just don't understand, right? Like we wear luxury watches, we tell the time with them, like we know that they're worth a lot of money. Sometimes the way that the watches are bought, like you actually lose a lot of money on them. There are ways to like look and use luxury watches in like a very smart, sophisticated financial way. And there are very common practices that luxury watches help to facilitate, like these stories that I shared today, right? And it may sound unconventional, but it is more common than people think, especially among the wealthy who like know how to move smart. And so the timepieces, it is about status for sure. It is always about status for like people playing at this level for sure. But it's also understanding like a strategy around this asset and how it can be a discrete financial instrument that holds value, it travels well, and it doesn't come with the same red tape as traditional assets. And as I said earlier, like we're in this world of increasing financial oversight and like constant market swings. Luxury watches, they offer this like freedom that most investments can't. You can wear it, you can move with it, and you can sell it. You can liquidate this luxury watch anywhere. So wealth preservation doesn't have to be tied to like a bank account or a country. It really could be completely borderless when you think about watches. So last slide on this section is like, so what next, right? Like how can we help, right? So you probably get this, but to kind of state it, it's like buyers at this level, they don't just like walk into like a luxury watch boutique and like get this type of help, right? Like they all have watch guys, and it's a relationship, it's a marriage, it's a long-term partnership, right? It's based on trust, it's based on access, it's based on discretion, and that's what I offer. And like a confidential concierge that really supports everything from like sourcing, insurance, mobility, and like long-term asset movement. We are taking on like a very small number of new customers as we kind of move into July. And if you're interested in learning a little bit more about some of these strategies, you're welcome to reach out to the Utopia team to get on the wait list. So I'll pause there and happy to take any questions. I do have like some bonus content because like we're just at like the bottom of the hour, so we do have some extra time. I have some bonus content about how luxury watches can be used for networking, as well as how luxury watches are like now in this trend of like wearable art, which I think is really, really cool. So I've got bonus content there. Before I move into it, I just do want to pause and just see if there's any like questions or comments on kind of this initial content that I shared around like portable wealth, tax efficiency, wealth preservation, and like those concepts as applies to luxury watches.